there's a lot of froth there because these stocks have been utilized as kind of a safe haven, and they've become so dominant that, again, there's a huge risk there. If all of a sudden those stocks come in, the market could go down 20% in a flash.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
And I mean, just sentiment alone, I mean, it's pretty remarkable, the crypto sentiment right now, specifically in regards to Bitcoin. It seems like anyone that was on the alt train has now moved into the Bitcoin train, and it's just, it's pretty wild out there right now in terms of bullish sentiment. And I would say, like, so I see a question here about, I talked previously, like over the last year, that Bitcoin could potentially decline by as much as 85%. That data point came from past cycles about how much it dropped in each of the past cycles. It was somewhere around that. I actually think that it also has to do with how much of a decline we saw in Amazon. If this was the .com bubble bursting in crypto, it was also looking at Amazon as being kind of the child of the .com bubble, and Bitcoin obviously being the one for crypto. And so if you look back at Amazon back in 01, it bottomed out down about 85+% when all was said and done.
What are you looking at on the S&P right now? Because I mean, and I think even in the title of the video on your channel is about all these divergences and whatnot.
Yeah.
What are you looking at with the S&P?
Yeah, I mean, the divergences are shocking, actually, how many different divergences we're seeing. Just based on purely the S&P chart, what we have here is you can see this upsloping trend line that actually goes all the way back to the COVID low. So if you take that low and you run it right through here to these highs, and it matches basically perfectly with these highs, we actually kissed that high right here before the latest pullback in the S&P, which was about a one week long pullback. And then what we're seeing here is we're rising again towards that same trend line. So I would expect that trend line, if we hit it, let's say later this week, it's not that much higher. I think it's about 20 to 30 points higher on the S&P 500. That'll be your next big resistance level. But again, for me, it's kind of looking at this, and I don't know if you have a chart on this, and maybe I should have given you a heads up, but I was wondering if you had the S&P 500 minus the top 7, the Googles, the Apples, the Microsofts, the Nvidias, and I would just be fascinating to look at this year, what's the actual return on the S&P if you take out 7 stocks. And I could be wrong on this, but I think the return is probably in the range of 3%. But in all fairness, you look at some of the market, the disparity in market caps. And again, what I'm showing here, guys, is this is the tech stock sentiment. And so the last time we were this high on tech stocks was in the .com bubble. And so you basically, now there you were higher. It did go higher than that quite a bit when the .com bubble hit. But just interesting to see that we have not been that high going all the way back to the .coms. And the one thing I would just say in regards to these big cap tech is that they have become so mammoth in terms of their market cap relative to the rest of the market that now you have the NASDAQ 100, and basically 50% of the NASDAQ is these stocks. The S&P is about 25+%. And so the reason why that's a concern, because when things are good, it's great, right? It takes the whole market up with it. If you're in an index fund, you're doing great. The problem is that if these things correct, and if you look at historical PE ratios, and this is something that a lot of people don't kind of realize because they're newer investors, but when I was growing up in the 2000s to 2010s, and I'm just getting into trading, in a recession, the general PE ratio for a large cap tech was 8 to 10. Well, you have Microsoft over 30, Apple at 30. Like, I mean, there's a lot of froth there because these stocks have been utilized as kind of a safe haven, and they've become so dominant that, again, there's a huge risk there. If all of a sudden those stocks come in, the market could go down 20% in a flash. So the interesting thing with the Qs is just like the S&P, there's another trend line here. And what we can see is there's a channel, right? So I'm a big fan of somehow the markets make sense out of chaos, right? So generally people look at charts and they're like, what the heck is this? It looks like a bunch of squiggly lines. But if you look at the low end here and you take this low through this low through these lows, we actually and you take a parallel from this top, you can see again, where did that pullback on the NASDAQ 100 occur? Right at that level. And if you look at where we're coming into now, we're kind of right back up into that level. Then you look at this pivot top right here, and we have that factor as well. And I think I showed this last time, but it's just such a fascinating thing for me to look at, is that if we look at the NASDAQ 100, or excuse me, the NASDAQ composite, last time I believe I talked about how the pullback, let me see here. Yeah, I believe this is correct. So if you take the low to where we currently topped out, look at that. So we dropped 37% and change, and we have rallied back 37% and change on the chart. So if you look at past cycles, the .com did this, where almost identical before it rolled over in the .com. I think the NASDAQ fell. In fact, let me go back and we could just take a look at this here. Let me go to the weekly.
Yeah, I think it was like 40 and 40, right?
Yeah. So that's that. This is by the way, this is the financial crisis, and it wasn't as much tech related. So again, you still had the same sort of bounce, but it wasn't equal. It was 18% versus a 23% drop. But if you go back here, I mean, this is again just freaky stuff. You had a 41% drop, 41% rally before the rollover. So it's very fascinating to look at the NASDAQ and be like, wait a minute. So we fell 37% and change. Now we've bounced 37. And now all of a sudden the NASDAQ's starting to struggle a little bit.
Like, could the S&P go put in a new high before it puts in a new low? And I think during inflationary cycles, it might not be the most likely outcome, but it is at least an outcome that could occur.
There's a possibility. There's no doubt about it. And again, you look at the liquidity that is still on the sidelines in there, and if that liquidity gets drawn into the market, absolutely, it could do that. Yeah.
Right. Yeah. So I'd be curious if that happens. I guess it depends on when the labor market rolls over and if inflation comes back.
And then, just for me, when I look at that chart that you have up right here of the S&P, I immediately think of Bitcoin in the last cycle, where we had that big drop in the middle, and then we went to 69, which just pierced that previous high by $4,000 or so, and then we saw the bigger move to the downside. And again, you could see how you could see how that could potentially replay there. Just as we wrap it up, so later this week for everyone watching, we have durable goods orders on Wednesday. So that'll be Wednesday at 10 o'clock, 10 a.m. Eastern time. Factory orders also there. FOMC minutes will be out at 2 o'clock on Wednesday as well. So again, FOMC minutes, which basically the minutes, it's supposed to be the minutes of the last meeting, but usually Jerome Powell, the minutes are a way for them to communicate what they want the market to think, right? So they can change little things in there, how hawkish they are, how dovish they are, just a little bit there. And then really the big one is going to be Friday's jobs number. I do think it's interesting. We had jobless claims for 3 consecutive weeks coming in at 260,000, which was sharply above what was prior. I think we were around the 215 level. And then last week we got jobless claims coming back in around that lower level. But I would just point out to people that oftentimes around holidays, people say, even if they lose their job, they say, you know what, I'll file, I'm going away with my family, or I'm doing this. And so they tend to wait to file maybe a week or two until that holiday is over. That happens really around Christmas as well. You'll see a drop in jobless claims because of that as well. So be curious to see, maybe it'd be interesting to see this week. I don't know if this week will change much because it is a kind of a holiday week, but next week would be big on jobless claims to kind of follow that number.